People are finally waking up to what I've been damn well saying for the last 3 years here. We're going to get rich in Canada because of one primary reason. It's population growth. I've been talking about it with our major companies, and now BNN is waking up to this reality. I'm going to show you the companies that will actually make you rich in Canada. They're the easiest buys. They're like completely nonsensical. You don't need to be a genius to figure this out. Just take a listen.
We have such unbelievable assets here in Canada, and clearly we have such strong population growth over the last few years. I think in 2022, we had faster growth in population than some African nations, the fastest growth of any advanced nation in the world. And Trudeau and the government says they're looking to add at least 500,000 new immigrants for the next few years. That's going to be fantastic. I mean, this is a zero-sum game. If other countries lose, we win. And this will benefit so many of our companies. I mean, 500,000 new immigrants, a lot of them want to come, of course, to the major cities, Toronto, Montreal, Vancouver, and a lot of them are coming, obviously, to Ontario as well.
And as soon as they get here, they need to find a place to live. One of their first stops is surely to one of the providers of cell phone services.
Absolutely. They need banking services. They need to go shopping at our grocery stores. They need to eat. They need to furnish their houses, their apartments. Obviously, some of the major winners will be the apartment rental companies. The biggest, of course, is Canadian Apartment REIT.
I believe.
Now, the stocks that they're looking at here are not the ones that I would pertain to the most. Canadian Apartment Properties REIT, I think, is really incredible, but they're going to have to deal with the headwinds, of course, of the higher interest rated environment. Even though they're going to be able to raise rents over time, especially as new tenants come in, they can really jack the rents up if they're losing old tenants. But with CN Rail, that's a no-brainer. The railways here have been one of the best performing assets. Restaurant brands, I think over restaurant brands, I would be more intrigued by companies like Loblaws, like the actual grocery stores that are dominant here in Canada. I mean, you look at even the 5-year return on this, it's up 124%, trading for around a 21 price to earnings, probably a little higher on the multiple side, but I mean, we're not talking like anything obliviously extreme, but I'm not much of a Shoppers Drug Mart, Loblaws kind of investor. This stuff kind of doesn't tweak my interest. I don't understand it as well, but I want to show you the direct ones and zeros, like how these numbers are actually correlating to these companies, because we can see it in the banks, we can see it in the telecom giants, and we're going to use TELUS, one of my favorite companies in Canada. I'm still considering buying this one back because it's just such a steady company for dividends and growth. And I mean, when you can get this kind of growth, like a doubling of the stock over the last 10 years, plus you're getting a 5% dividend that is doubling as well over the last 10 years. I mean, think about it. You bought this stock 10 years ago, you were getting 16 cents a quarter. Today, you're getting 35 cents. You're over doubled your dividend, which means your yield on cost goes from 5 to 10%. Your stock price is doubled at 10,000. I mean, you just look at these numbers. They're pretty astounding. Why are they so astounding? Let's dig down into the numbers. Let's take a look at this, because their robust mobile phone net additions were 112,000. Their total mobile and fixed customer growth was sitting around 301,000, which is up 29,000 over last year. But the record high customer additions of 1.043 million for the full year were driven by consistently potent, I love that word, potent operational execution. I mean, this is astounding. And if you're going to be continuing to get six-figure immigrants, this is going to continue to grow. And TELUS is a pretty diversified business now. Their operating margins, they're not like the highest margin-based business you can get into, but if you're looking for cash flow sustainably, and obviously there's some infrastructure costs that come with this. I mean, none of these companies are like clean cut and perfect, but they are, like our telecom giants, are very well diversified. TELUS, you're getting into security, you're getting wireless network, you're getting internet, they're moving into telehealth. If you look at something like Bell, which the stock price isn't as consistent, but Bell, you own Crave. If you have liked, all these big shows coming out like The Last of Us, all of that was hosted through Bell, right? And Bell's got a lot of diversification in their network as well. And I think Bell pays over 6%. Like, our telecom is a good sector to have exposure to for the population growth. Look at Royal Bank. If you could really only own two companies, I mean, Royal Bank, TELUS, I don't think they're going to do you too wrong. Plus, they both trade, as many of you were arguing, how do I buy these stocks in the U.S.? Well, Royal Bank and TELUS do trade on the U.S. exchanges, but take a look at Royal Bank here. Again, you go over the last decade here, hit up 2012. I mean, you're talking about well over doubling of the stock price. Let's take a look at the dividend. Same deal as TELUS, going from 63 cents or 60 cents a quarter 10 years ago to $1.32. I mean, again, you're over doubling of your dividend, very in line, but take a look at the customer growth. I mean, this is redonkulous. So in Q1, 2023 and their Q1, the way they've done this, I don't know why the banks roll over their fourth quarter of last year. It counts towards Q1. So keep that in mind because you'll see it says Q1 2022. But nonetheless, they brought on net new clients added of 130,000. You know how ridiculous that is? In 2022 alone, they brought in 400,000 new clients. You think about how sensibly easy it is to understand, right? Canada, unlike the US, is a monopolistic society, so you got to be a little bit more careful. You want to focus on the monopolies that are highly concentrated in Canada, not like your Shopify's. I mean, there's a lot of companies here that are great, but they're globalized. You want companies that are going to take pure advantage of population growth, that are fixated here in Canada, and that's going to be your telecom. That's going to be a lot of your banks. Now, banks are globalizing, but obviously things like Royal Bank, there's a lot of banks that are just concentrated in Canada. And even still with the U.S. globalization, it's only really just building on the powerhouse companies that these truly are, let alone packing in those crazy dividend yields, right? But I'll pass the question off to you. I just wanted to point this out today because I find it utterly fascinating.